What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be covering in this video is a brief ORTEX short interest and utilization update for AMC. Last night, we did get the exchange reported short interest, and it is kind of messing with the estimates that we are seeing on ORTEX today. So I want to go through those numbers with you in case anybody is a little bit worried on what is going on there. In short, there's really nothing to be worried about. We are just going to have to see these estimates get recalibrated and update throughout the rest of the week. Now, in addition to this, we need to go over that potential gamma squeeze that we are looking for going into the end of this week and the September monthly options expiration period. We are seeing the price of AMC really significantly increase over the last couple of trading days. And what that does is it forces a lot of these institutions who are selling options to input more buying volume in order to hedge those options, which in turn just sends us even higher. Now, the main thing that I want to get across to you guys in this video is a situation revolving around this liquidity drain that we have been seeing in the market over the last couple of weeks and months. We are seeing a sizable amount of hedge funds liquidate a significant portion of capital out of a specific sector at the current time. We are also seeing the margin debt numbers start to decrease September 1st. If you guys have been watching my videos over the past couple of weeks, you guys should know by now that September 1st is a pretty significant date with the phase 5 updates of the uncleared margin rule. This is going to be a very important rule surrounding those OTC derivatives. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out in getting this information out to as many people who want to learn. And the more people that we have staying up to date with accurate AMC information, the stronger our community becomes. And if you want to see more videos like this, make sure you hit that subscribe button. So when we're looking at the chart today, we're up about 3.2% on the day at around 45.75. So we've seen some pretty volatile price moves today. I'm expecting to see even more volatility going into power hour. But again, this is before that happens, so we're just going to have to wait and see. Now, when we come over to ORTEX, the short interest is now at around 17.05%, as we can see here, and that is ORTEX's estimate. The short interest as a percentage of the free float, according to the exchange reported data. And again, what we have to think about with this exchange reported data right here is these institutions don't necessarily have to report their short interest. We've seen it in the 13F filings, and we've seen the fines in the past for underreporting or overreporting, and in general, misreporting their short interest. The fines are less than $1 million every single time. But when we look at the utilization, it is staying pretty much the same at around 90.68. And for those of you guys who do not know, when we see the utilization start to increase, it puts a lot more pressure on not only the institutions such as hedge funds who are taking out these shares on loan, but the actual institutions who are loaning out these shares, because if they cannot get their hands on more shares to loan out, well, then they have a problem. So when we come over to Stonko Tracker, at the current time, there's 115,000 options in the money. It is entirely possible that we saw a significant amount of these options being hedged yesterday when we saw that very significant price run up for AMC. But when we come over to the actual option chain and take a look at some of the other levels that we are looking for, if we can cross $50 a share, I do believe that we are going to see even more of a significant run up due to all of this hedging that is going to come from these institutions inputting that buying volume. And again, September 17th, we already see a significant amount of pileups on these out of the money strikes. So if those contracts can run in the money or out of the money to in the money, we could potentially see a lot more buying volume, just pushing the stock even higher. Now, let's get into this hedge fund liquidation situation. So something to keep in mind is that we know that the leverage levels of all of these institutions is still incredibly high at the current time. We have seen this margin debt level start to peak, and typically when we see the margin debt start to peak and come to the downside, it typically leads the market, meaning that we'll see the margin debt start to decrease before the overall market starts to decrease as well. So when we get those July or August numbers, we're going to have to really take a deep look and see, well, is this a little bit of a fake decrease in the margin debt, or are we really seeing the first phase of deleveraging? But it already looks like we are seeing this wave of deleveraging when we come over here. Last week, when observing the stunning collapse of the most popular hedge fund VIP basket, whose 6-month performance now matches its worst stretch on record following the Lehman bankruptcy. We pointed to Chinese stocks, one of the key culprits, with Goldman noting that 1/3 of hedge funds in Goldman's analysis held a China American depository receipt in their long portfolio at the start of Q3, contributing to the recent headwinds against hedge fund returns. Specifically, since the middle of February, a basket of China ADRs has declined by 55%, with all but one of the stocks generating a negative return, 40 of the 60 stocks declining by more than 20%. Now, when we scroll down a little bit further, we can see naturally with Chinese stocks continuing to slide, many were curious if hedge funds retained their Chinese exposure, meaning did they keep their positions in a lot of these Chinese stocks? Well, courtesy of Goldman's prime brokerage, we now know the answer, and it is a decisive no. This is a very important development that I don't think a lot of people are really going to fully grasp, or why this is so important. If Chinese stocks were slipping and all of these hedge funds decided to sell their positions, it is entirely possible, because this data is being reported by Goldman Sachs' prime brokerage, the largest prime brokerage at the current time. It is very possible that, since we know that the margin debt is very high and a lot of these institutions are over leveraged, when these positions start to go against them, they were getting margin called, something that we've been talking about for a while. And they may have gotten to the point where they saw, well, we do not want to have these positions on our balance sheet anymore, taking these significant losses. So then they took the loss on the position. I think we're going to see this really start to happen with a lot more of these institutions. But again, when we're looking at these hedge fund developments, I am personally focusing on when we could potentially see the lower, smaller level hedge funds really start to have issues, because if they have less capital and they're having these positions really go against them, we are then going to see them have to not only sell off their long positions, but potentially cover their AMC shorts first. When we see that first wave of covering, it pushes the share price up even higher to the levels where those larger institutions with even larger AMC short positions could potentially have to cover at those higher levels. Now, moving on a bit further in this article, you guys might be thinking, well, we are nearing the end of the fiscal year. We are nearing the end of the third quarter. Maybe this is something that we have seen before. They typically sell off at this time. That is not the case. Last week saw the second highest weekly net selling for Asian equities in over 5 years, the highest selling ever for EM Asia, while Asian equities total saw record weekly net selling flows last week. So when we think about this from a broad market perspective and we're applying it to AMC, we have seen a lot of catalysts that could influence the squeeze that we are all hoping to see in the near future for AMC. But what we have to look at as well as these unrelated catalysts that are going to help drain the liquidity of a lot of these institutions and really put the pressure on these over-leveraged positions to the point where they are going to have no choice but to either cover their shorts, sell off their long positions to try and maintain these really increasing liquidity requirements. So I am incredibly bullish on what we have going forward. When we come back over to the chart of AMC, we are up now about 3% on the day. We've been bouncing around the VWAP, but again, I am incredibly bullish on what we have going forward into the end of this week and the weeks following. The one cautionary note that I would like to add is that tomorrow does start the Jackson Hole Symposium. We could see comments about Fed tapering of asset purchases, and that could have an effect on the market to the downside. If we do see a couple of red days towards the end of this week, that is not something to be worried about. It is just the broad market reacting to what the Fed is saying, and it does not change anything with the short thesis and short squeeze thesis for AMC. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I'm trading and which strategies I'm using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.